Had a big IPO season during the coronavirus pandemic. Question is, what comes next now that we've got some giants out of the way? Joseph Osha is going to walk us through a few of the private companies that you might have missed. He's a managing director of equity and an equity research analyst at JMP Securities. Joseph, you've got a couple really interesting reports out tracking some of the most interesting private plays in the market right now that you call the efficient 50. What do you mean by that?
Hi, and good morning. Thanks for having me. What I mean by that is I'm interested in companies that make things work better. And that can be power generation, that can be transportation, it can be logistics, anything. I think when we think about environmental impact and having less of an impact on the environment, we need to think about more than just solar and electric vehicles. And so that's why I call it the efficient 50. Okay.
So these are companies that seem like they're in these secular growth trends, right? The ones that in the public markets have been getting extremely frothy. Is that happening in the private markets as well? Are their valuations moving in sync with what we see for some of the other EV, solar, space plays?
Well, it's harder to observe, but I can tell you that we're seeing companies raise some pretty fancy amounts of money. Probably the most visible one has been Rivian, which is still private, but which has raised literally billions of dollars. And I'm seeing other companies that are relatively early in life cycles, not with not much revenue at this point, now raising $100 million plus rounds. So certainly, if one looks at the amount of money flowing into the sector, it would suggest that valuations are going up. Yes.
So what are the companies here that are the standouts to you? Are these companies that are now on the verge of going public? Are they still going to, are they better off staying private for a long time? I mean, we had all the talk and run up into Airbnb and DoorDash. What are the next ones on the radar here from your perspective?
Sure. Well, I mentioned Rivian. I think that one has been widely discussed, and I think at some point you'll see them hit public markets. Since literally we put the report together, and then right then Proterra, which is an electric bus maker, did announce they're going out via a SPAC transaction. And there's been a lot of conversation around Lucid. So some of the EV makers, I think we're seeing. One of the areas that I'd like to see more progress on is long duration storage. That's a big deal. So although it's early, I think you could see a business like Form Energy, for example, attract a lot of investor attention. And then there's some really neat businesses in integrating all of the images and data that are being gathered and helping things run better. So I look at companies like Planet, for example, or Spire. Those are exciting companies. So they're honestly, we could see a lot more of what we've seen, to be honest.
Now, right now, the revenue and the way you track the growth of these companies, how quickly is it moving? We've got a graphic here that looks at some of the components of the fundamentals here. I mean, obviously hard to characterize them all from a holistic perspective, but I imagine these are these are companies that did quite well during the coronavirus period that we're in right now. It seems like it.
Yeah, there certainly hasn't been any cessation of business activity or fundraising for most of these businesses, and some of them, if you think about vehicle automation, commercial vehicle automation, for example, are businesses that would benefit from what we've seen. So if you look at those $100 million plus companies, again, some of the EV companies, there's a very exciting company called Uplight, which helps utilities engage customers and helps them drive better use of energy. So honestly, I can think of a whole slew of businesses that frankly have benefited from the past year.
Joseph, the idea here that these companies are benefiting, does that mean that the leadership is going to want to come to the market at a time where there's been a lot of excitement here? Is there a window that might start to narrow if life starts to return to normal? I mean, are these companies just win-wins no matter what the scenario? Because right now in the public market, there is just a lot of specific attention on companies where growth boomed during the crisis. Not just survival, it boomed, and therefore we should think that things might slow down a little bit.
Well, there's certainly an element of pandemic to this, but if you were to ask me what the window is for the efficient 50 in terms of public markets, I'd say the next 10 years, because a lot of what's driving this, and I'll say, for example, I live in the Bay Area, the skies turned orange last year was unbelievable. Those problems are not going to go away when the pandemic goes away. Rising CO2 levels are not going to go away. And we just voted an administration into the White House that I think is very focused on this. So I don't see this window closing for efficiency-oriented companies at all, to be honest.
Okay. So we've seen the SPACs playing a big role. Is that going to continue? Is this the style? It seems to be working, obviously, so far.
Yeah, it's really interesting, and obviously, that type of transaction has a mixed reputation. But for my sector, remember, these are not software companies. These are, in a lot of cases, companies, making things, making batteries, making EVs, putting charging stations out there, more capital-intensive businesses. And right now, it does seem like the SPAC approach is better suited to those companies that need to capitalize themselves when they don't necessarily have a lot of revenue at the beginning. So I don't know, but I certainly don't see any sign based on the people that I talk to that the enthusiasm for this type of transaction is going away, to be honest.
Hey, Joseph, one particular thing, SoftBank has been a big player in a lot of these growth companies and the private and public markets, and the idea that maybe some of their business is going to be going public as well through an investment vehicle. Is that going to be a way for investors to kind of get a proxy exposure to the private portfolio?
I couldn't comment on SoftBank per se, but you brought up something interesting that I do want to mention, and that is there's an enormous wave of interest on the investor side in making sure that they're providing adequate exposure to ESG companies, and that stands for environmental and social governance. We're seeing all kinds of people make sure that they're deploying capital correctly there. So maybe SoftBank, maybe not, but I think you're going to see more and more ways, as an individual, as a pension fund, to invest in a way that is, that observes good ESG practices. Absolutely.
Okay, Joseph, good to catch up. Thanks for coming back to us.
Likewise, thank you.
Appreciate it. Joseph Osha is Managing Director and Equity Research Analyst at JMP Securities. Little foray into the private markets.